Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options with your morning market preparation video for March 6th, 2018. Well, my goodness, we had a rip-roaring rally yesterday and a beautiful follow-through. Now, remember yesterday I was talking about the importance of getting a follow-through to that Friday bullishness, and we certainly got that. They just kept getting stronger and stronger throughout the day, rallying very hard. Now we have a couple things that we have to consider. If you recall, just 1 week ago, right here, we gapped up and rallied 400 points. Also keep in mind that we were above the 50-day moving average when that occurred. And just as quickly, we flipped over and gave it all back. So when we see a big swing like this, we have to consider the possibility of a pullback. Now, currently, futures are pointing to a 140-point gap up. Let's keep in mind that the diamonds here, the Dow itself, still has to cover more than 400 points just to reach the 50-day moving average. That means this big swing in here has some questions in it. And if you notice, I have now drawn a symmetrical triangle on our current pattern. It's bordered by higher lows and lower highs. Okay, so within this symmetrical triangle, we have a dilemma, because these can do this, just wind up. And that's really what could be occurring here, whereas we're just winding up to make a big move one way or the other. The challenging part of this pattern is just the overall scale. The overall scale of the highs and lows. We're talking huge swings here as a potential. So the question you have to ask yourself is, as we rally back up here, how bullish are you in this trade? Are you really comfortable that we're going to now break on through and beat this downtrend right here, or could we just be rallying toward another failure point that could swing us back to this low or even break us lower? So that's the question we have to deal with here. And believe me, it is going to be a challenging one. And again, because of the massive swings that we're seeing in the market. And just one more time, I just want to emphasize how quickly, we rallied 400 points here just to give it back. Okay, so keep that in mind as you plan going forward. Be really, really careful on how you plan your risk. Let's take a look at the SPY. Now, the SPY looks better than the Dow. The SPY has rallied back to this resistance level right in here, where we, failed before. And at the same time, we have rallied back to the 50-day moving average, that blue dashed line, that 50-day moving average. That is a bit of a complication. If we look at this very simple, just moving average chart, we can see that the 34 EMA here is dead flat. And we've rallied back up here to test against it. Keep in mind, this green line here is the 3 exponential moving average. The pink line is an 8 exponential moving average. And we are not on the right side of the world yet. We want to see these kind of things. We want to see us crossing back above, holding the shorter term average, holding above those longer terms. And we are not there yet. So as bullish as you may feel, that warm and fuzzy of such a great rally, we also have to have a dose of cautiousness here and be careful with your interpretation, not to just chase or rush in, throwing all caution to the wind, because the big swing lower can be very punishing if you jump in too soon. Let's take a look at the Qs now. Now the Qs, very different story. The Qs challenged this all-time high up here, putting in a double top high failure pattern. That is still true. Notice that we have this trend here that I've drawn, and by the way, that trend can be adjusted a lot of different ways, so I'm not telling you that this is exactly the right place to draw that line. It's a range of area here. But this failure to break down held this support level, also held the 50-day moving average, and now we're rallying back to this resistance level and testing the underneath side of that uptrend that we failed. Also, kind of a dilemma point, you know, if you remember the old Arsenio Hall show, that's kind of showing my age, but he would always come up with things that make you say, and this is kind of one of those things, the things that make you say, do I throw caution to the wind and get bullish here, or do I be really, really cautious and prepare for the next move lower? Good question, and I wish I could give you an answer. Right now, we're showing bullishness. We're gapping up this morning, but let's keep in mind we can gap through resistance levels only to find those sellers come in and reverse it. So be careful, all right? Be really careful about chasing into this market. It is very volatile still. These big moves make it very, very challenging for the swing trader. IWM rallying back to the 50-day moving average, showing a gap up this morning, but running right into this major resistance level, the exact place where we saw the failure last time. Again, symmetrical triangle being built here in that question area as to which way we go from here. So plan your risk carefully. Let's take a look at the VIX. The old VIX here pulling back yesterday on that nice move, but let's be very aware here that the VIX has not broken down through this support level. If we take that 50-day moving average, it has not broken down. You would have thought with such a big move yesterday that we would have had a bigger decline in the VIX, and that just didn't happen. And keep in mind, this support area right here across these prices in the VIX is still holding. So volatility is still very much in play here. Reversals can be very swift and they can be brutal, almost violent. So be really, really aware of that as you plan your day forward. Let's take a look at T21.22. And T21.22, we have had a major swing here in T21.22 as of yesterday. We went from the bullish reversal zone in a one-day move all the way up here to the potential bearish reversal zone. A little bit spooky there, right? So can we continue to travel higher? Yes, we're going to gap up higher this morning. And we can even stay up here for a while. But keep in mind, we made a massive swing all in one day, and that swing can be taken all the way back just that fast. So easy big rallies like that can easily be reversed the other direction, and we have to be prepared for that. Okay, on the economic calendar, we don't have a lot on the economic calendar here today to really worry about. We have factory orders at 10 a.m. and we do have 3 Fed speakers. We had the Fed speaker early this morning. We have 2 more this evening, kind of rounding out the day. But the factory orders is what's important here. And factory orders are expected to decline slightly according to consensus today. So kind of keep that in mind as that news comes out at 10 a.m. That could be a little bit of a negative effect on the market, and really the only thing here that will probably move the market today. Keep in mind that we're just kind of leading up here to the employment situation number on Friday. That employment situation number is highly anticipated. It is always watched. It's that measure of economic growth and whether or not we have inflation or not. And all of this is just leading directly to I think it's the 21st I think it's the 20, is it the 21st? Yeah, the 21st is the FOMC. So we're just kind of leading up to that. It is entirely possible that we could see the market maybe get a little light and choppy. And that would honestly be a good thing, in my opinion, if we just kind of consolidated for a while and rested and spilled off some of this volatility. And that could occur just because we're waiting for those numbers, okay? Remember, that Friday employment situation number is normally a very important number, and we sometimes will get a little bit soft or choppy as a result of that. Okay, on the earnings calendar, we had over 140 companies reporting today. Those are coming out in fairly rapid succession this morning. And remember, earnings by and large have been strong, and analysts are projecting great earnings for this year. So, keep that in mind. Earnings have been strong. Economic data has been relatively strong. So, perhaps we shake this off and get bullish here. I don't know. But watch these big swings. All right? Just be really careful. Hey, everyone, if this is the first time you've seen this information, please do me a favor and click on that subscribe button on YouTube. And remember, if you subscribe to YouTube, you're going to get the first chance of getting this video before I get it posted anywhere else, and a little more preparation time. So please click that subscribe button. Also, you can follow me on Facebook. The Facebook recording gets posted secondly, so you can click that follow me button on Facebook. Click those thumbs up buttons. Please click those thumbs up buttons. That helps the algorithm show these videos to more people. I do appreciate that. Feel free to drop a comment, and also I just want to thank everyone for all of your great response and following the great comments that you provide. I really do appreciate it. You guys are the best. Feel free to share this video with anyone that you may feel can benefit from this information. Everyone, take care. I want to wish you all a fantastic day. Talk to you all very, very soon. Bright and early Wednesday morning. Take care, everyone.